Welcome to our comprehensive technical analysis of Qualcomm Incorporated, ticker symbol QCOM, as of January 1, 2026. In this video, we'll break down the latest price action, key technical indicators, and strategic insights for traders and investors. Whether you're a seasoned market participant or just starting out, understanding the current technical landscape of QCOM can help you make more informed decisions. Let's begin by setting the stage with a quick overview of the stock's recent performance and why this analysis matters right now. QCOM closed at $171.05, entering a cooling phase after a period of consolidation. The stock is currently trading below both its short-term and medium-term moving averages, signaling some short-term weakness. However, it remains well above the long-term SMA 200, which is a positive sign for the primary bullish structure. The overall market sentiment is one of caution as QCOM tests critical support levels. This sets the tone for our deeper dive into the technicals, highlighting the importance of monitoring these key thresholds. When we look at the moving averages, QCOM is showing a classic divergence: short-term bearish, long-term bullish. The stock is trading below its 20-day and 50-day simple moving averages, which often signals short-term selling pressure and possible further consolidation. However, as long as the price stays above the 200-day moving average, the long-term uptrend remains intact. This divergence is crucial for both traders and investors to recognize, as it can inform different strategies depending on your time horizon. The 20-day simple moving average, currently at $175.56, is a key short-term indicator. QCOM's price is trading below this level, confirming that there is ongoing short-term selling pressure. This often acts as a warning sign for traders looking for quick entries, as it suggests the momentum is not yet in favor of the bulls. Monitoring the relationship between price and the SMA 20 can help identify potential reversal points or continued weakness. The 50-day simple moving average, or SMA 50, sits at $173.26. QCOM has slipped below this important support level, which often acts as a trigger for further consolidation or even deeper pullbacks. For medium-term traders, this is a key threshold to watch. If the price can reclaim the SMA 50, it may signal renewed strength. Until then, caution is warranted as the stock navigates this consolidation phase. 200-day simple moving average, currently at $159.11, serves as the major floor for QCOM. As long as the stock holds above this level, the long-term uptrend remains safe. This is a critical reference point for long-term investors, as a breakdown below the SMA 200 would signal a significant shift in market structure. For now, the primary bullish trend is intact, providing some reassurance despite short-term volatility. The Relative Strength Index, or RSI, is a popular momentum indicator. QCOM's RSI 14 is currently at 44.58, placing it in the bearish neutral zone. This means the stock is not yet oversold, but it's also not showing any strong upward momentum. There's still room for the price to drift lower before value buyers might step in. Keeping an eye on the RSI can help anticipate potential turning points in the stock's momentum. The MACD, or Moving Average Convergence Divergence, is another key trend-following indicator. For QCOM, the MACD is at 0.374 positive but barely above zero. This suggests a lack of strong trend and reflects the sideways, choppy nature of recent price action. If the MACD crosses below zero, it would confirm a sell signal and likely lead to further downside. For now, the trend is weak and directionless. Bollinger Bands are a classic tool for measuring volatility and identifying overbought or oversold conditions. QCOM is currently testing the lower Bollinger Band at $170.17. A close below this level could trigger a band walk to the downside, or it might spark a sharp reversal bounce. The proximity to the lower band highlights an immediate oversold condition on a statistical basis, making this a critical area to watch for potential price action. The Average Directional Index, or ADX, measures the strength of a trend. With an ADX reading of 15.01, QCOM is in a very weak or non-existent trend environment. This means the market is range-bound and directionless, making trend-following strategies less effective. Instead, mean reversion strategies may be more appropriate in this kind of market, as price tends to oscillate within a range rather than trend strongly in one direction. Support and resistance levels are crucial for understanding potential turning points. QCOM's pivot point is at $171.95, with the price currently below this level. Immediate resistance lies at the pivot, followed by the SMA 50 and SMA 20. On the downside, the lower Bollinger Band at $170.17 is the first critical support, and if that breaks, the next major support is the SMA 200 at $159.11. These levels will likely dictate the next significant move in QCOM's price. Beta measures a stock's volatility relative to the broader market. QCOM's beta is just 0.199, which is exceptionally low for a large-cap tech stock. This suggests that QCOM is currently decoupled from broader market swings and is moving on its own unique drivers. For investors, this means QCOM may offer a degree of insulation from market-wide volatility, but it also means that stock-specific news and events will have a greater impact. The stochastic oscillator is a momentum indicator that helps identify overbought and oversold conditions. QCOM's %K value is at 8.83, and %D is at 15.24, both deep in the oversold zone. A reading below 20 is considered oversold, and such low values suggest that selling pressure may be reaching exhaustion. This creates a potential setup for a bullish reversal, especially as the stock nears its lower Bollinger Band support. QCOM is currently in a corrective, range-bound phase. This means the stock is neither in a strong uptrend nor a clear downtrend, but rather oscillating within a defined range. Such phases can be frustrating for trend followers but may present opportunities for those who favor mean reversion or range trading strategies. Understanding the nature of this corrective phase is key to setting realistic expectations and managing risk. For aggressive traders, the current setup near $170 to $171 could be attractive. The combination of an oversold stochastic oscillator and the test of the lower Bollinger Band suggests a possible reversal bounce. However, this is a higher-risk strategy as it relies on a quick rebound from support. It's important to use tight stop losses and be prepared for volatility if the support fails to hold. For more conservative investors, patience is key. The safer approach is to wait for QCOM to reclaim the SMA 50 at $173.26 or for the RSI to rise above 50, signaling renewed momentum. This reduces the risk of catching a falling knife and increases the probability of entering on a confirmed trend reversal. Waiting for confirmation can help avoid unnecessary losses in a choppy market. Breakdown below $170 would be a significant bearish signal for QCOM. This would open the door for a move down to the next major support at $160, near the SMA 200. Such a move could trigger further selling, so it's important for both traders and investors to monitor this level closely. Risk management becomes especially critical in these scenarios to protect capital. It's important to remember that this analysis is based solely on technical data and does not constitute investment advice. Market conditions can change rapidly, and no indicator is foolproof. Always conduct your own research and consider your risk tolerance before making any investment decisions. Consult with a financial advisor if you're unsure about your strategy. Let's quickly recap the moving averages. SMA 20 at $175.56, SMA 50 at $173.26, and SMA 200 at $159.11. The price is below the short and medium-term averages but above the long-term average. This configuration highlights the current divergence between short-term weakness and long-term strength. Keeping these levels in mind can help guide both entry and exit decisions. The combination of a neutral to bearish RSI and an oversold stochastic oscillator creates an interesting dynamic. While the RSI suggests there's still room for further downside, the stochastic indicates that selling pressure may be nearing exhaustion. This synergy often precedes a short-term bounce, but confirmation from price action is essential before acting. With the MACD barely positive and the ADX signaling a weak trend, QCOM is in a classic range-bound environment. This means that strong directional moves are unlikely until a clear breakout or breakdown occurs. Traders should be cautious about chasing momentum and instead focus on range-based strategies or wait for a decisive move. The current test of the lower Bollinger Band at $170.17 is a pivotal moment for QCOM. If the price holds and reverses, it could spark a quick rally. If it breaks, further downside is likely. Bollinger Bands are especially useful for identifying these inflection points, so traders should monitor price action closely around this level. Support levels at $170.17 and $159.11 are critical for QCOM's near-term outlook. These levels often act as psychological barriers where buyers may step in to defend the stock. If both supports fail, it could signal a shift to a more bearish environment. Understanding where these supports lie helps in setting stop losses and managing risk. On the upside, resistance levels at $171.95, $173.26, and $175.56 are the hurdles QCOM must clear to regain bullish momentum. Each resistance level represents a potential area where selling pressure could reemerge. Watching how the stock reacts at these levels can provide clues about the strength of any recovery. Given the current range-bound and low-trend environment, mean reversion strategies may be more effective than trend following. This involves buying near support and selling near resistance, capitalizing on the stock's tendency to oscillate within a range. However, it's important to use proper risk controls as range breaks can happen unexpectedly. In weak or directionless markets, trend-following strategies often underperform. QCOM's low ADX and sideways action mean that chasing breakouts or breakdowns can lead to whipsaws. Traders should be cautious and consider waiting for clear confirmation before committing to a trend-following approach. Periods of low volatility, as indicated by narrow Bollinger Bands and low ADX, can precede sharp moves. While the current environment is calm, traders should be prepared for volatility to return. This can create both risk and opportunity, so having a plan in place for sudden moves is essential. With a low beta, QCOM is moving more on its own company-specific news and less in sync with the broader market. This means that earnings reports, product launches, or sector news can have an outsized impact on the stock's price. Investors should stay informed about company developments to anticipate potential catalysts. To summarize, QCOM is in a corrective range-bound phase with short-term weakness but long-term support intact. Key levels to watch include $170.17 for support and $173.26 for resistance. Momentum indicators suggest a possible reversal, but confirmation is needed. Both aggressive and conservative strategies have their place, depending on risk tolerance and market confirmation. As we wrap up, remember that technical analysis is just one piece of the puzzle. QCOM's current setup presents both risks and opportunities, and the next move will likely be determined by how the stock reacts at critical support and resistance levels. Stay disciplined, manage your risk, and keep an eye on both technical and fundamental developments. Thanks for joining us for this deep dive into QCOM's technical outlook.